Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, October 30, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, we left the trend line up we talked about last night and the day before, and you can see from a daily chart perspective, looks like she settled right around the trend line, still above the 20-period moving average, however, somewhat riding the 20-period moving average, but above it, and the trend is your friend. But if you nail it down or drill down a little bit, you'll notice that at the end of the day, she really did give up the trend line. So we're going to find out tomorrow whether that's a shot across the bow, some kind of a warning signal situation. Big picture in the SPY or the SPX today is the Spider or the SPX was down about 1/3%. Spider was down $1.84, SPX down about 19 points. So that is qualifying as a down day. We have some of the big tech earnings after the bell today, and again tomorrow. So we'll see if they're going to jerk the market around, have a gap higher open, a gap lower open. We'll see what Mrs. Market has in store. Right now, we're using this trend line as somewhat of a bogey. If she recaptures it right away tomorrow morning, no harm, no foul. But if we have follow through to the downside, then she will have given up this trend line. And by the way, see where this arrow is? This is today's activity, 9:30 a.m. Eastern Standard Time, meaning right around the opening bell, she came into the trend line, spiked it, hit a number, bounced back in the other direction, or should I say, ripped it back up in the other direction. And in a few moments, you'll see exactly where that information came from. Traders in the live room nailed it. Traders inside the numbers nailed it. We nailed, once again, low of day, at least in the morning session, notwithstanding the fact that she made a lower low into the close. That doesn't matter. It's a morning business. Before we go ahead and wrap up the daily chart of the Spider, you'll notice no material change from the chart perspective between yesterday and today. Sure, the S&P was down about 1/3%, but again, above all the moving averages, and there's no material change on the chart. So at 9 o'clock, this is to Inside the Numbers. This is the commentary before the market opens for business. She's hanging around the flat line to get things started. 582.50 to 583, give or take, is an early zone of overhead resistance. 582.50 to 583. And you can see right here that 582.50 to 583 was in fact early overhead resistance. So not only do we have the support, but we have the overhead resistance, where the overhead resistance acts as a target once we're in a long trade. And then of course we have the flip side, which is where support is today. How about 580.50 down to 579.85 is a zone of support and happens to be around the same trend line from yesterday for a bounce back in the other direction. There's your 579.85. They spiked it, spiked the trend line, and then, as we say in the trading parlance, ripped it back up in the other direction. All laid out at 9 a.m., 30 minutes before the opening bell rings for business. Do you think we had participation in this trade today? You betcha. It's all in here. Pause the video, read the notes, go back to the chart, and double check the work. All the numbers we need to be successful trading in the S&P during the trading day. Not to mention we have a whole laundry list of other markets. Pause the video, look at the numbers, read the notes, go back to the chart, and double check the work and see if the numbers are viable to where you can use them to your advantage during the trading day. We have a list of markets on the table each and every day. If I stay with this, and I'm going to make the decision at the end of the week whether this is going to stay put, I'm going to raise the price, not to existing members. They'll just be raising the price to new members coming in based on more value, more work has to be put into this in the morning, significantly more work, but more value. But it seems to be taking hold. Traders like it. I think I'm going to keep it, but I am going to raise the price. Existing members will be, as they say in the trading parlance, grandfathered in. We had some stocks on the move today. Remember, it's earnings season. We got a plethora of things going on. We got KHC, CMG, AMD, Lilly, Cat, Cuervo, and First Solar. First Solar is the only one out of this list that didn't hit its entry objective. Let's take a look at some of the others. About Kraft Heinz, 33 and a quarter, hit it, spiked it, ripped it back up in the other direction, base hit. Nice trade. CMG, the numbers work. About AMD, 151 and a quarter, 149 was the zone. As you could see in the morning, they blew through 151 and a quarter, went down to 149, ripped it back up, and then hung around in the zone for the majority of the day. The numbers work. They gave you a banter back and forth within the zone for a base hit if you wanted it. AMD, the numbers work. This one was interesting. How about Eli Lilly? Check this out. There's more than meets the eye in Eli Lilly. So they opened below the first number, so that's off the board, doesn't exist. Then they come into 793.18 and down to 779.95 plus shipping and handling and rip it back up in the other direction. So technically, this is your zone. They ripped it back up and they gave you an absolute whopper with cheese out of this trade. But here's the best part. One of the traders in the live room, Armand, has a big position in Eli Lilly. He says, where's my exit? We do some work in real time in the live room. I show him where the number is, but then I show the traders in the room where I got it from. It's not a mystery. I go through the process of where I got the numbers. And here's what we came up with. Well, there was one more number in between, but in order to save time and not squeeze 3 lines in here, that was the zone that I gave the traders as a target where they would have to exit at least some of the long trade, if not all of the long trade. That was going to be overhead resistance, and I explained exactly where it came from and why. This is the value that you get in the live trading room. Nice exit on Eli Lilly. About Cat, 369.25, spiked it, absolutely ripped it back up in the other direction, filled the gap. You're looking at a high here of 388.26 off a buy of 369.25. Same day, same morning. How you doing? For lack of a better number, it's a rounding thing. It's $20 in a morning in Cat. What's going on over in Camp IWM? Got a little tail situation, tried to rally, tried to get up to run a test in the vicinity of the high of the breakdown candle. We talk about this every single day. They got in the vicinity, in the neighborhood. They were driving around the neighborhood of the high of the breakdown candle. Didn't get up to the high, but they were in the high 20 or 25% of that candle. And then they fell all the way back down toward, once again, the 20-period moving average. Finished down on the day, only 30 cents or less than 0.15%, but we're going to note that they had somewhat of a rally and a failure, but above all the moving averages, we will say that the trend is in fact still her friend. Of course, no change to the weekly chart in the IWM, down 30 cents. What's going to change on the weekly chart? Nothing. We'll just say still above all the moving averages, she's okay. Folks down at the transportation department, we're up $15 today, or 0.1%. That's a rounding error, and that also is no material change on the daily chart whatsoever. Up 0.1%. That's just a rounding error. Now, when you go over to the Q people, we had a down day of about 0.75%, $3.78. Still above all the moving averages, but we're watching because if the tech earnings falter, they're going to pull the rug out from the Qs, as we can already see, and we'll see in a moment. The SMH is teetering on a problem child. Remember, we had that big time down day, and we have that bearish, flaggish, wedgish, sloppy-ish pattern going on, which we'll talk about in a moment. And the SMH would be a good proxy for the Q people. Nothing wrong with the financials, no material change here, up 21 cents. They're just riding above the 20-period moving average, and all the moving averages for that matter, no change in XLF. We can move it along. Here's what I was talking about at SMH. We had a big up day yesterday, down day today, below yesterday's low, so they gave up those gains, and basically you have a bearish, flaggish situation continuing in development. This is something to heed. We have to watch this closely. If this breaks to the downside, your other markets will likely be, and this is in the be following at the same time type of situation. I want to talk about something just a little different tonight. We're going to talk about the GDX and gold. GDX represents a basket of gold mining stocks, and what you'll notice is what's going on up here. So GDX has come back in to test the 20-period moving average. They topped out on the 22nd of October, just a few days ago. Now, what you will also note is that historically speaking, the gold mining stocks will lead the actual metal itself in terms of price action. So therefore, when I notice something like that, we talked about this briefly in the live room today. You look at gold powering forward to new all-time highs. Are gold miners signaling that we're going to see a pullback ensuing in gold miners sooner than later? Remember, gold is getting slightly extended from home base. Things don't like to get too far from home base or the 20-period moving average. They will tendency to go sideways or come back to eat off some of that quote-unquote, air quotes, overbought condition. But what we have in the miners is a tell, if you will, somewhat of a flare up in the air that maybe the miners are telling us, hey, there's a turn coming, at least for a corrective situation in gold itself, the metal itself. We'll watch that day by day. I've seen this before, read this book before, been to the movie. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.